In our previous session, I talked about assessments. In this video of assessments, I was able to explain the various kinds of assessments. I talked about the self-assessment. I went ahead and talked about the additional assessment, the default assessment, then the advanced assessment. Now, just a recap, the self-assessment is what you do, the act of you filing a return. The advanced assessment is when URA gives you or sends you an assessment requiring you to pay some money before the due date for some reasons. So let's put those two aside. There are these other two. There is what we call the default assessment, the assessment that you receive when you have not yet filed a return. Then there is the assessment that the additional assessment, the one that you receive when URA has reason to believe that you have an unsatisfactory declaration in your return. This default assessment, when it comes, or when the additional assessment comes, it comes along with penalties and interest charges. So if the basis for this assessment coming to you is justifiable, you simply go ahead and pay the money that has been assessed. In case you feel you're not able to pay the money, then it's a matter of getting to URA physically. You discuss with the officials there. You discuss a payment plan. You get into a memorandum of understanding that you're going to pay the money in installments over maybe say 6 months, something like that. Now, it's not always going to be the case that when you have been assessed that the grounds will be justifiable. That is in the eyes of the taxpayer. Actually, in some cases, URA can give you an assessment and it has grounds upon which this assessment is being based, and to the eyes of the taxpayer, this assessment is not justifiable. So when that happens, the taxpayer can go ahead and object to the assessment. In today's session, I am going to talk about the process of objecting to such assessments. So let's get to it. All right, you are in your business. You have received this email from URA of an assessment. Maybe the grounds for the assessment are maybe under declaration of sales from maybe third-party information, or there are some figures that you have not properly categorized in the income tax return, or there are some expenses that have been added back. It could be any reason. They've assessed you. You've looked into the matter, you have discussed this with your accountants and your advisors, and you feel you are not satisfied with the assessment, and now it's time for you to go ahead and object. So how do you do this? Of course, the objection is something that you do online. I am going to show you how we do that online, but let me first give you the timelines. So when it is time for you to object, you have up to 45 days. From the time you received the assessment, you have up to 45 days to make an objection to that assessment. So when the 45-day window closes, it's potea. But there are people who take long without checking their emails. So it is very possible that the 45 days can elapse and you were not even aware that you received an assessment on your team. Does it mean that when the 45 days elapse, when you've not yet been made aware of that, it means your things have gone really south? No. When, in the event that the 45 days elapse and you've not been able to lodge an objection to the assessment, you have the option of requesting for extension. You request URA to grant you more time to lodge the objection. That request is also made online. I am going to show you how it is made in a while. So the law says it is 45 days from the time you received the objection. When you receive the objection, if within those 45 days you are not able to lodge an objection, you can request for extension if you have justifiable reasons, and the extension will be granted and you'll still be able to lodge your objection to the assessment. This applies to domestic taxes. By domestic taxes, I'm talking about things like income tax, things like value-added tax. I don't know if there are any assessments that come through with pay as you earn, But like domestic taxes, that is what it applies. Now, when it comes to customs, with customs, in case you're dissatisfied with an assessment that has been put on you by a customs officer, the procedure for customs related issues is a bit different. I think I'll have to make another video for customs later on. So for this, whatever I'm talking about really applies to domestic taxes. So yeah, it's 45 days. Now let's assume you have applied, you have objected successfully on the portal. You have, sent in your objection to the assessment. After sending in your objection or lodging your objection online, so that objection is going to be assigned to an officer and objection and appeals. Yeah, an officer is going to start looking into the matter, and of course the URA officer here is acting on behalf of the commissioner. So they are supposed to get back to you with a response, or they are supposed to get back to you with an objection decision within 90 days from when you lodged the objection. So when you lodge an objection, URA has up to 90 days to arrive at a decision. Now, in the event that 90 days elapse and the commissioner or URA has not gotten back to you with a decision, then you, the taxpayer, can go ahead and elect to, in writing, you write to the commissioner that, well, 90 days have elapsed, you have not responded to me. So when the commissioner does not respond, it simply means that now it is deemed that URA has accepted your objection. That only happens by default. However, there are some cases whereby maybe you could make an objection to an assessment, and the nature or the circumstances surrounding your objection to the assessment require that URA is supposed to take more time to maybe come to your premises and maybe make a more thorough investigation about the matter, maybe look into some of your books and stuff like that. And of course, that could take more than 90 days. So in the event that such circumstances are going to be that URA is supposed to take more time, maybe to physically come to your location and verify your books, then that 90-day rule is waived. It doesn't work. And of course, this is going to be done in writing. That is, after your objection to the assessment, they're going to write, the commissioner will write to you telling you that due to the nature of the objection you've made, we are supposed to come and make our own verifications and so forth and so on. So the 90-day rule will not work. So when the 90-day rule is waived, the commissioner will have to write to the taxpayer to inform them that that 90-day rule will not work, and so the work to begin, URA's assessments or investigations into the matter will begin as a result. So yeah, you lodge an objection, URA has 90 days to respond. The 90 days can be waived off in case in special circumstances, and this 90-day waiver, it is done in writing. So if within 90 days the commissioner is able to arrive at a decision, then that is what we call an objection decision. Prior to arriving at that objection decision, you will still be sent an email requesting for documents to support your objection. Now, the documents or the evidence that is meant to support your objection could range from source documents. They could ask for stock cards, receipts. They can ask for a bank statement. They can ask for financial statements or financial accounts. It depends on the nature of the objection that you've made. So, of course, when they write to you, then you're supposed to go and physically present that evidence. Now, when you're presenting that evidence to support your objection, in most cases, at the point you're handing it over, you could get engaged in a small meeting with the officer. They write minutes. You start discussing the matter. They will ask you questions, you will respond the way you're supposed to respond. And when it comes to these objections, by the way, it is an opportunity for URA to look into other matters. It happens a lot. Yes, you were assessed based on some issue, okay? So you go into that objection closure meeting, you'd explain that matter, they finish it up, then they will start asking you about other things like they look at your expenses. They could be like, this transport expense is too big, could you please get us the ledgers for this? What nature of business do you do? Like, they start examining other aspects of your financial statements that have nothing to do with the objection. Yeah, that's just how it is. You need to be prepared for those kinds of things. Yeah, that they will ask you any other thing that has nothing to do with the objection that you're making. So, well, after the objection closure meeting, then the URA officer will continue to make their further assessments, and then they will arrive at an objection decision. They're supposed to arrive at that objection decision within the 90 days from the time you lodged the objection. So, when they arrive at this objection decision, if they can either allow the objection in full, or they allow the objection in part, or they can completely reject your objection. Now, if they reject your objection and they're like, your grounds are not satisfactory, the assessment still stands, if you still feel dissatisfied, then the next level is to go to the tax appeals tribunal. So from the time they make the objection decision, you have, and you're not satisfied with the objection decision, you have up to 30 days to take the matter to tax appeals tribunal. Taking the matter to tax appeals tribunal means that you are requesting the tax appeals tribunal to review this objection decision. So the tax appeals tribunal will also sit and they review the objection decision. If the objection decision at tax appeals tribunal is such that they agree with the objection decision, and you're still not satisfied with the outcomes of the tax appeals tribunal, then from the time of the tax appeals tribunal has arrived at that decision, you have up to 30 days to take the matter to High Court. So that is how it is. You lodge an objection. After lodging the objection, URA has 90 days to respond, or the 90 days can be waived off depending on the circumstances. So if within the 90 days an objection decision is arrived at, that is in the unit of objection and appeals, when they arrive at that objection decision, if you're not satisfied with the objection decision, you have 30 days from the time that decision was made to move to the tax appeals tribunal. If you take the matter to the tax appeals tribunal, requesting them to review the objection decision, the tax appeals tribunal does its work, and it also arrives at a decision regarding the review. If still you're not satisfied with the outcomes at the tax appeals tribunal, then you have 30 days from the time that decision has been taken for you to take the matter to High Court. So those are the timelines. That is how the objection process essentially works. So right now, just one more thing, you need to, when it comes to an assessment, when an assessment has been sent to you, it's not always going to be that you're just going to go ahead and object. This is more like you have been accused of a crime, and whenever URA does that, it does so with basis. So your response is either you're going to plead guilty or not guilty. If you are to plead guilty, it means that you have accepted the matter, the crime, and you're going to go ahead and pay the money that has been assessed, either all at once, or you enter into a memorandum of understanding with URA to pay the money in installments. They normally give a window of 6 months to spread through your installments. That is if you've pleaded guilty. If you feel you have reasons not to pay the money, then that is when you go ahead and object to the assessment. So objection to the assessment is for people that have done their due diligence, they've done their background checks, and they feel they have a good case to proceed. Then another thing about default assessments. You remember default assessments are assessments that are issued when you have not filed a return. Let's say you're supposed to have filed a return 3 years back, okay, an income tax return 3 years back, and you did not file this return for income tax. So because you did not file this return, they go ahead and issue a default assessment. A default assessment comes basing on estimates that because you didn't issue the return, maybe this is, according to estimates, according to your industry, this is the income that you made, and I mean, this is the chargeable income, this is the tax you should pay, these are the penalties, this is the interest, whatever. So they give you. So maybe 2 years later, you look at, okay, 3 years later, you look at into this assessment and you're not satisfied. You're like, okay, I didn't file a return, maybe because I was not working, or because I didn't know I was supposed to file a return. Well, ignorance is no defense, or whatever reason you choose that you're supposed to object to the assessment. Maybe you object it with a nil return, or you object it with the actual figures. Yes, they made an estimate and you feel they overestimated your chargeable income, so you make an objection to give them the right figures, that this is how I operated in that period, these are the taxes I'm supposed to pay. Now, well, yes, if URA does not have any other third-party information to pin you down, they will allow the objection, yeah, because they normally will ask for your bank statements to see if you've really indeed to verify the income you've been receiving, and if you're in the FRIS ecosystem, yeah, I don't know. Okay, the thing is, they will make their investigations to find out, to see if your objection is authentic. However, one thing that you should note is that when you make that objection to a default assessment, maybe you make it 2 years later. If the objection is to go through, your act of making that objection to that assessment meant that actually you filed the return for that period at that time. It means you finally filed the original return. You are supposed to have filed this return 2 years back, but you have filed it 2 years later through an objection to an assessment. So when you do that, whereas your objection might go through, the system will automatically generate penalties for filing late. I don't know if that is clear. Maybe I will emphasize it a bit more when I am showing you how we do these things, how we object. Okay, so let's get to my screen. Let me start showing you how we do all this online. All right, now let's get started with a scenario where an assessment was issued to me and I was not able to object within 45 days. Let me get a case study here to show you. So I'm going to right now I'm going to log into someone's account and I show you. So right here I have logged in. Of course, where do you find such messages? In case you have an assessment, they will always send a copy of that assessment to the email of the registered contact. That is when you're at the point when you are applying for your TIN number. You submitted details of the authorized contact person relating to a TIN. So that email that you submitted, a copy of the assessment is already sent there, and also here under received messages. So let me click there. So after logging in, I come to the inbox here, or where you're seeing received messages. I click on that. When I click on that, it's going to bring up the The messages, of course, there are no messages in the last 30 days. I'm going to come here and click View Archived Messages. So when I click on the View Archived Messages, I get to see here there's this notification here, income tax notice for assessment right here. And when you look at this income tax notice for assessment, you realize that here this message came in on the 28th day of October 2021. Today is the 30th day of March 2022. So if you to count this assessment here, we've not yet responded to it. Okay, because the 45 days have elapsed, it means the window has been closed, but we can request for extension to lodge this objection. It's what I've been talking about earlier. Let me try and open this assessment. So I'm going to click on it to download it. So I'm going to click. So here is the thing. These are the details. Due to unsatisfactory declaration you made in your return, URA hereby informs you that an administrative additional assessment has been issued to you under that section of the Tax Procedures Code Act 2014 with the following details. So the tax type is income tax, and that is the tax period is right there. The URA compliance office is Natete, and the tax payable, that is including penalty, is this here right here. So the due date of the assessment is 31st of December 2020, and the tax is supposed to be payable by 11th of November 2021. Now, when you look at this right here, you realize that the due date of the assessment being 31st of December 2020, today we are in 30th March 2022. Time has really elapsed. So these are the details, but we can get the details further by clicking on this attachment. So I'm going to go ahead and click the attachment to view it. So I click. When I click on that, it is downloaded down here. So you can see here it has been downloaded. So I'm going to click on it to open it. This is how it looks like. That is how an assessment looks like. Income tax notice for assessment. That is the heading of this document. And when I scroll down here, the description is that the notes to the assessment, they're talking about the assessment period, the assessment type, and this is it. These are the notes to the assessment right here, that the assessment is to disallow salaries and wages which are not declared in pay as you earn. In other words, this is an entity. It has declared salaries and wages in its income tax return, yet it is not registered for pay as you earn. So because it's not registered for pay as you earn, URA is disallowing that expense on those grounds. Okay, so of course this requires that you go you look into the matter. It can be any reason. That is what they put here under notes of assessment. It can be any reason. So you look into the reasons, and then you see whether the grounds are justifiable or not. If they are not, then you go ahead and make the assessment. Now, the assessment number is right here. Up here, assessment number is here. So this assessment number you're seeing is the one we are going to feed in to the URA portal when we are applying to lodge the objection, or even when we are applying to extend the objection. Now we already know that as far as this assessment is concerned, if I'm to scroll up here, this assessment, as far as this assessment is concerned, it came in, the assessment date is the 28th day of October 2021. That's the assessment date. And today is 30th March 2022. So it means the 45 days within which we were supposed to lodge an objection already elapsed. So just to prove to you that indeed our time, the 45 days indeed really elapsed, let's try and object to this very assessment and we see what happens. So what I'm going to do is that I'm going to go back to the URA portal. After going back to the URA portal, I'm going to go down here to Objection and Appeals. So when I get to Objection and Appeals, hovering my mouse, then I come to with liability right here. Okay, so I'm going to click on Objection and Appeals, Objection with Liability. So I'm going to click on that. So when I click on that, this is what comes, right? So there's the taxpayer details, they are right here. These are the taxpayer details. Then there is what we call the objection details, this other tab. So what I'm going to do is that I'm going to click on that objection details tab. I click on it. So when I click on that objection details tab, I'm going to go ahead and put the assessment number here. Once I put the assessment number here, all these other details will automatically populate themselves. That's how it's supposed to be. So let's go back to our assessment. I'm going to copy that assessment number from there. Then I'm going to come and paste it here. Now, of course, when it comes to the URA portal, copying and pasting using the mouse is not possible. So we copy and paste using the keyboard. So I come back to the assessment. Here is the assessment number. So I'm going to highlight it using my mouse. Then copying it, I'm going to press Ctrl C all at once on my keyboard, Ctrl C to copy it. Then I'm going to go back to the portal. I'm going to put here and then Ctrl V. When I say Ctrl V, it is pasted there. Then I'll click outside here. When I click outside here, a message is granted me. They say you cannot object to the specified assessment because the statutory timeline within which to lodge your objection has expired. So the statutory timeline they're talking about here are the 45 days. So they're telling me that you are therefore advised to make arrangement to clear the assessed tax to avoid further accrual of interest. So I'm supposed to go ahead and pay. That is what I'm being advised. Of course, this is just an advice, but me, I want to object to the assessment because I feel I have a good case. Of course, they won't mention it here because they would rather you go and pay because it increases revenue for the government for, developing Uganda together, that kind of thing. So yeah, whereas here they are saying you are therefore advised to make arrangement to clear the assessed tax and avoid the further accrual of interest. The other option is that I can request them to extend give me more time to lodge my objection because I feel I have a good case. So that is exactly what I'm going to do. So let me click OK here. So I can't object. So let's get back to Objection and Appeals. I come here to under e-services menu, Objection and Appeals. Under Objection and Appeals, I hover my mouse. So I'll come here and go to Extension to Lodge Objection right here. So I'm going to click on that, Extension to Lodge Objection. That is now how I apply to extend objection. So when I click on that, this is what happens. Definitely acknowledgement request for extension. There is taxpayer details. This is the taxpayer details that come here. When I scroll down here, objection is against the liability, so that's what it is. Then assessment number. When I click here, I'm going to paste the assessment number here, okay, and the rest of the details will automatically fill themselves. So I'm going to go back and copy the assessment number of the assessment. So it is right here. So I'm going to go ahead and copy it. When I copy it, I come back here and paste it right there using Ctrl V. I click on the side, and when I do so, then you realize that in the remaining boxes, the assessment details are going to auto-populate. They are talking about the income tax. It's yes, the tax type is income tax, the date of assessment is that, the tax assessed, the end date of statutory period, date of service of order, whatever. So now, proposed date of lodging objection. So, okay, I am asking for an extension. By what time do I feel I will be ready with the objection? So I'll come here and select a date. So today being 30th March, I can say, okay, let me give myself 1 month ahead. So I can click and be like, okay, I put like 23rd or any date that I feel is convenient, or 2 weeks ahead or 3 weeks ahead. I put a date. So it means when I put a date here, proposed date of lodging objection, that's the date when I hope to have lodged the objection. I'm giving myself a new deadline, that is. Then the reason for extension, you give a reasonable reason, like maybe the accountant was sick, the accountant that was supposed to do, the objection was sick, or maybe the accountant that was supposed to do the objection went out of the country, or there are reasonable reasons, like maybe you guys were under lockdown and you couldn't access the computers to make the objection. The thing is, you put a reasonable reason, or a reason that is justifies why you need the extension of time. You type it in right here. Let me try and type in say the accountant that was supposed to lodge the objection was sick. Okay, but now he is available to proceed with the objection. Now, now this one is I'm just giving an example. Do not now go on and keep using this reason. Yeah, the circumstances are really different. They are unique from entity to entity. So really, so yeah, so I give this reason. After doing that reason, I'll go ahead and click submit. When I click submit, I'll get an acknowledgement that shows that they've received that extension. And so what happens is that you're going to just keep checking your inbox here. You're going to have to just keep checking your inbox, your URA inbox, to see if they've acknowledged your request. So what happens here? So I'm going to go ahead and I have clicked on this. I'm going to click submit, and then we are going to wait for some days and see if, well, after clicking submit, we are going to wait and see if they have accepted our extension. So I'm going to click submit. So now we are back, and well, it's time to check whether our extension has been granted. So I'm going to go ahead and click on received messages here. So I click on that. When I click on received messages, okay, so here we have it right here. We have decision of extension to lodge an objection. It is right here. So I'm going to click on that to open it. So when I click on it here, it says that URA hereby informs you that your application for grant of permission to lodge objection after the statutory period of filing with reference number that has been approved. So our request to give us more time has been approved. So they are saying that the due date for lodging your objection is 30th April 2022. That's the date I requested. So please ensure that you file the objection by this due date. We assure you of our best services. So this is it. So this is the thing. Well, if you want to look at it in detail, there's an attachment here. If I click on it, it will download, and I can read the entire, decision. And well, you get what I mean. So now that it has been approved, now let's get back to, our objection now. Let's start our objection process now. So now that we have been given more time, of course, in case you're still within the 45 days, this step is not necessary. The step of you requesting for more time is not necessary. But now for us, since we are now we've now been granted time, now it's time for us to go ahead and object to the assessment. So let me download the assessment again, and because I want to extract the assessment number. Let me use a different case study to lodge an assessment. This is a different assessment from what we had handled earlier. So this is an income tax assessment. So this is the assessment number that we are interested in. The issue here is that this person has been assessed. The notes to the assessment or the reason for the assessment are down here. Assessment to disallow employment income Since client is not registered for pay, you can see the reason is a bit related to what we have been discussing earlier. Okay, so I am objecting to this assessment. So what I'm going to do, like I had mentioned earlier, I'm going to go ahead and go to Objection and Appeals here. Under Objection and Appeals, I go to Objection and Appeals with liability. So I'm going to click on that link. Now this is how we object to an assessment. And this assessment, this is an additional assessment, but it is the same procedure even when we are dealing with a default assessment. So these are the taxpayer details right here. So we go to objection details, that tab. So I'm going to click on objection details. When I click on objection details, this is what comes up. So under objection details, we are required to put the assessment number. So I'm going to go and copy that assessment number here. This assessment number, I'm going to go ahead and select it, highlight it, then I say Ctrl C to copy it. When I say Ctrl C to copy it, I'm going to come back and paste it right there using Ctrl V. Then I'll click on the side. So when I click on the side, the other details will come, the date, the income, the tax head, the date of assessment, and whatever, and objection type. So yeah, so now when I put in the assessment number, you realize that up here there is what we call Excel download stroke upload. So now the Excel download stroke upload so happens to be the actual return against which the assessment was made. Now we're supposed to go and download that return first. We're supposed to download it, then we make whatever adjustments that we have to make in line with our objection, then we shall get back here and upload it. So I'm going to come here, click on that tab, and so from when I click on that tab, so I'm supposed to come and click here download, that is income tax for non-individual return. So when I click download here, this is the previous return or the assessment against which, this is the return against which the assessment was issued. So I'm going to go ahead and click download. When I click download, the return is going to download the template. So it downloads as a compressed zipped folder. So I'm going to double click. It's right here. Then I'm going to open it. So I double click on it and it is going to open. Of course, when it is opening, it takes quite some time to open. It opens in protected view. Now you can see here there is nothing. So I'm going to say enable editing. When I click on enable editing, then I'll come here and click on enable content. So when I click on enable content, it's going to start loading. So what is happening here is that the details processing file, this might take some time according to the size of the file. Please wait. I'm going to click OK. So now what happens now is that the details of the return, the original return against which the assessment was instituted, the details start loading. Are you sure you want to select neither? I say yes. So it starts loading. And so it's going to take some time loading. Depending on the size of the file, it is now putting in the details of the previous return, the return against which the assessment was made. It's now loading them there automatically. So here they are asking, please do not cut and paste any value in the sheet. Say OK. Now, so here we are. So the thing has been populated. I come to section B to C. It is there. Now, when you come to section B to C right here, we come here to the return itself. Yeah. Now, if you look at this, this is the principal tax, right? We have the chargeable income and then the principal tax. Now, according to the notes or to the assessment, you need to take very keen interest in this. The notes to the assessment, or the reason why this assessment was made, was that they added back employment expenses. They disallowed an expense. So in most cases, when they disallow an expense, in this thing that you have downloaded, it's going to reflect that which they assessed. So of course, when they disallow this assessment, it meant that the chargeable income has to increase to 65,719,600. And so because the chargeable income has increased to that amount, so the principal tax is that, because the expense has been disallowed. So in your response, you are saying no, that expense is not supposed to have been disallowed. So in your response, it means you're supposed to undo what these people did. Now, what did these guys do? We go to section 1, new, right here. You remember, for those that have watched the video on income tax return for a company, when I was explaining these schedules, when we come to schedule 1 here, let me go there and you see. When I come to schedule 1 here, new, this schedule 1, this is the schedule where the computation for the tax is made. So in this schedule, it is where the allowable deductions are made, and those items that are supposed to be added back are added back in this schedule. So if I come here and I scroll down, you're going to realize that under this heading here, that under other non-allowable deductions or expenses, they went and put salaries and wages. Now, this was not part of the thing that we had uploaded in the original return. This details, salaries and wages 27,228,000. This figure has been put here by the officer that actually made the assessment. They put this figure there to show that, well, your salaries and wages have been disallowed. I think you also the reason, because this entity is not registered for pay as you earn. Yeah. So now, because they did this, and as a result of doing this, when we come back to section B or B to C here, when we come back here, that increased our chargeable income to 65 million. Now, because I am objecting, I am going to go ahead and reverse what he did. How do I reverse what he did? By deleting that thing he made. So I'm going to come back to section 1 here. So salaries and wages is this. So I'm going to go ahead and delete that. So I'm simply going to hit delete. Delete it, even this, I remove it. So I've deleted that. So once I delete that, let me get back to section B to C here. You realize that now my chargeable income has gone back to 38 million. 38 million, that is what I had, that was what I had initially filed. So when it gets back to 38 million from the 65, so it means that now I have undone what he did, or what the URA person did. I have undone it because I have my reasons why. Now this is just a case study. It could be any other thing, any other item, like, but you get the picture. So let me get, I'm going to open, there are some objections I made in the past, and I stored these files. I'm going to open them, like the downloadable templates, that is. I'm going to open them, and I'm going to show you this same thing in action, so that you appreciate what you need to look out for. So let me get there now. Let me first minimize this one for now. We are going to come back to this. So there is this folder here. I downloaded it some time back when I was making an objection. Let me open it and show you guys. So of course, when you double click it to open it, definitely these things take time to load depending on the size of the file. So at first it comes when it has nothing. Then I click enable content. Then from there, I'm going to click, of course, it starts dancing around processing file. This might take some time. I say, okay. Are you sure you are selecting neither? I say yes. Then it will start loading. All right, finally it has loaded. Okay, even this, let's go to section B to C right here, down. When I get to section B to C right here, now this assessment here, we increased the chargeable income to 235,984,97, you know. Now let's see what was done. So let's get to section 1 here. Section 1 in brackets new right there. I'm going to click there. So section 1 in brackets new, this schedule, I mean schedule 1, it's where the tax computation is made. So when we come down here, you find that okay. So here the total for, the reason for the assessment, it was as a result of a mismatch in total inventory in the balance sheet and income statement. Okay, you're seeing mismatch, this was the reason, these were the notes to the assessment. Mismatch in total inventory in the balance sheet and closing stock in profit and loss. So as far as this is concerned, there was a mismatch in the total inventory in the balance sheet and closing stock in profit and loss. What I'm trying to, okay, the right thing to do here is, of course, when you're preparing financial statements, of course, the closing stock in the profit and loss should be the same as the balance sheet. But well, the person that made this did not, when the person that filed the original return made a mistake. There was a mismatch between these two figures, and so an assessment was made, and as a result of that mismatch, this amount 26 million was added back, and that was it increased the tax liability. So this is at this section. So when you are objecting, you are supposed to undo what they made. Now, for example, for this case, you undo this by first of all deleting it and deleting that. So after undoing what they have assessed, then you go ahead and correct whatever you feel you think should be corrected. And then after doing that correction, then you go ahead and validate this thing and upload it. So for this case, the mismatch meant that you're supposed to go back to the profit and loss and correct that mismatch thing. After correcting it, it means in the notes or in your reasons for objection, you'll be saying that it was just an error, blah 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 blah. Then you present your financial statements to show proof that indeed it was just an error. The financial statements say otherwise, da 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 da, and the objection should be accepted and so forth. So this is just just an example. Of course, when I deleted that, when we go back to section B2C down here, you realize that our chargeable income reduced back to 109, and this is, I think, what was filed in the original return. So that's just that. Just different case studies, examples, just to show you. I am not saying that it's always going to be like that. It depends on the circumstances. When an assessment has been sent to you, the reason as to why the notes to the assessment are the ones that are going to give you what to do. And when you are correcting your return, in the event that you feel you should object to the return, you should go ahead and correct only that which has been, the issue that has been queried is what you need to address. It's advisable that you only address the issue that has been queried. You only address that matter and then you upload your objection. If you go ahead and tamper with other figures besides that which they queried, well, it's only going to open you up to further investigations, because yes, during the objection closure meeting, the officer will notice that, well, you also tampered with this figure, tampered with that figure. Why did you tamper with this? Why did you tamper with that? And you'll only be probed further to explain those things, and it's up to the officer to either accept or reject your changes depending on your circumstances. Okay, so away from that, now let's get back to, I'm closing this. I'm going to close this. So now let's get back to where we were. We were here. This is the return that I'm working on right now, the one that I'm going to object to in real time. We went to section 1 and we removed the issue. The issue was that the employment expenses were disallowed. So I have deleted what they did. So we are back to default position. And the default position here is that our employment expenses must be deductible. Let me go to our profit and loss and see.
Our profit and loss is under section F. We go to section F new. When I scroll down to the expenses where I put the expenses, you'll find that the expenses get back to employment expenses here. If you see salaries and wages, it is 27,228,000. So these salaries and wages, this 27,228,000 had been disallowed. Why? Because this entity is not registered for pay as you earn. So I went and deleted and I undid what they did. Now that I've undone what they did, there is no need to go ahead and change any other figures depending on the reason or the basis for the assessment. So I am refuting that, and so I'm going to go ahead. One more thing is to go and whether the return is original or amended. I'm going to come here and say amended. So when I say amended, I'm going to put the return number that I am objecting to, and the return date. So how do we get those? Well, let me just show you how we get them. So this return, if I'm to come back to the assessment, this was an income tax assessment for the financial year. It's an income tax assessment for the financial year 2019 to 2020 right here. So I'm going to look for that return for 2019-2020 and I get the return number and the return date so that I come and fill them in here in these two sections. So where I get that information from the return history. So I'm going to go back to here. Okay. So I'll go here down here to e-returns, hover my mouse over e-returns. So I go to who returns, I skip that section of original, I skip that of amended, I come to others, and under others, I go to view history right here. I'm going to click on view history. When I click on view history, I'm going to select the date for the income tax. So I can select the date. I said it was 2019 to 2020, right? Yeah, 2019, 2020. So I'll just click any date in 2018. I can just click any date in 2021 as long as 2019 is cushioned in between there. So I select income tax final. So I'll come here and select income tax return for an individual, click on that, then I hit search. So from my search results here, you can see that actually 2019-20 return period is 1st 2019 to 30th June 2020. And from here, actually, you can see the status here. When you see APRV, that means it's approved. APRV means approved. ASMT means assessment. So it means that it is this one. This return has an assessment attached to it right here. Okay, so it's the one. I'm going to simply download the receipt and get the copy and paste the figures that I want. You can also just get them here. The return reference number is actually those numbers you're seeing, those digits, and the return filing date is actually this. Let's see. Actually, let's just get them from here. The return reference number is this one, and then the return filing date, return applied date is that one. So let me get this. The return, I'm going to copy it using Control C after highlighting, that is the reference number. Then I'm going to go ahead and put it there in the return number. Control V, it has been pasted there. So I bring the return date. I'm going to go back. Return date is the return applied date is this on 22nd January 2021. I'm going to go ahead and say Control C to copy it. Then I'm going to come back here, return date, and say Control V. And right there it is. Okay, so I've put it's an amended that. So according to this one, I have disallowed you've seen what I've done. So of course, this is just a case study. It depends on the thing, the circumstances you're in. The whole point here is that your response to your objection is supposed to be tailored to the basis URA is assessing you on. So the actions are going to vary. They are going to be different, and it's going to be depending on why they are assessing you. I mean, if even when you're going to court, the way they defend a murderer will be different from the way they defend somebody that has defaulted from a loan. I mean, what you do to defend them is different. So I'm going to go up to the very last schedule and validate this return. So that's what I'm doing. I'm going to schedule 8, new, then I'm going to click validate. No error found in sheet. Do you want to generate upload file? I'll say yes. Income tax return, I'll say save. Yes. So now that I have done that, I'm going to go back to the portal. Now remember, when coming back to the portal, the other place for objection and appeals, it had already timed out. I had logged in again, so I'm going to go back there. So I'm going to go to to objection and appeals. I'm going to say objection with liability. I'm going to click on that. So it's like I'm going to repeat the whole process again because we spent too much time without offline, and so the login timed out. So I'm going to go ahead, and these are the taxpayer details right here. So I'm going to have to get to the objection details. I'm going to click on that. So when I click on the objection details, the assessment number, I'm going to go ahead, copy it from the assessment and paste it there. So I'm going to go to the assessment. This is the assessment. I'm going to go ahead and get the assessment number. I'm going to copy it like I had already showed you earlier. Then I'm going to get back here and paste it here. Click outside here. When I click outside, remember assessment number. So when I click, all these things auto-populate, and when they do, even the Excel download or upload thing comes. Okay, so now what happens here is now the grounds for objection type. I'm going to come and say it's based on facts. Of course, if it's based on interpretation of the law, you will say that. If it's both, you'll do that. I'll simply say based on facts. Okay, so ground of objection. Now, grounds of objection, there are different things here you can say to define your objection. Maybe disallowed input tax, errors in tax computation, estimated output tax. There are various reasons here for the grounds. Now, for me, I'm simply going to put others. Please specify. I'm going to put others. Grounds of objection, I'm just simply going to say it's based on facts. I'm basing on facts to others. So descriptions of reasons or grounds of objections in brief. So I'm going to give my reasons why I feel this objection is not okay. So now that I have put the description, I have constructed a few sentences to describe my issue here. So I'm going to come, I'm not simply going to go ahead and say submit. I'm going to come to Excel, download or upload. I'm going to come and click there. So now when I click here, remember the first time we came here, we had come to download the template. We downloaded the template, we made the adjustments that we felt we needed to make depending on our objection. Now it's time for us to upload it. So that's where we're saying upload your revised return or assessment. So this is where we're going to upload it from, the revised return or our revised assessment. So I'm going to go ahead and choose a file right here. I'm going to click choose file. So this is going to browse my computer. I'm going to go to quick access here. When I go to quick access, I go to income tax return upload. This is the most recent document I've just validated. I'll click open. So it is here. So I'm going to click upload. Do you want to submit your return? I'll say okay. So you give it some time as it's uploading. Here they say form uploaded successfully. I'll click OK. So when I click OK, the details start showing down here. So from here, what we can see there's the principal tax. This is 19 million. non-disputed, is 11 million, disputed is 8. So we can also say here that the penalty, I have also disputed the penalty. In other words, this was what was assessed, the total, this was the total, then the non-disputed, then this is the disputed. We've disputed 8 million here, we've disputed all this, we've disputed all that. As a result of our response, this is what we disputed. So before you hit submit, you're supposed to make sure that what you did not dispute, the non-disputed is what it's the tax liability. If I'm to come back to our Excel sheet here and open it here, you'll find that this was our chargeable income, and as a result, this is our principal tax, 11,547,480. This is the tax before the assessment came in to increase the tax liability. This was the tax. So you have to make sure that this principal tax is what is reflected as your figure for what you've not disputed. So if I'm to minimize this, I go back here under non-disputed column, it is 11,547,480. So this is what we have not disputed. That is what we had filed earlier anyway. So that is the principal tax. This is what we are disputing. We are saying no, this extra 8 million that you're saying we should pay because you've disallowed the employment expenses. No, we have disputed that, and we've given our reasons. So after doing that, then it's time to submit. All right, so I'm going to go ahead and click submit, and the thing will go. This is what non-disputed, the rest is disputed. So that is the acknowledgement for our objection, and that's it. So we are done with our objection. Recording these kinds of videos takes quite a lot in terms of resources and time. I would appreciate it if you considered to donate towards this. The link to the donation is in the video description below.